Well, good morning, traders. TGIF, and look where we found ourselves today. We are at what I would consider pretty freaking key level for the end of the week. I mean, this is the breakout point. Just you guys can see on this chart right here. This is the S&P, right? Those are the previous highs at 82. Excuse me. It's Friday morning, and it just came off of the 4 o'clock hour. So excuse me for my lack of ability of speaking on a Friday. It's the 52.85 level, which was the previous breakout point or previous all-time highs. We broke that a week last week, and this week we are now flirting with it. So the reason why this is so important is because obviously it's the S&P. Secondly, it's the previous highs. And thirdly, at the end of the week, by the end of the day, we are either going to be in breakout territory, we're going to close in breakout territory, which seems most likely, but there's also the risk that we actually have a false breakout this week. And so what happens today will probably greatly influence price action next week. So where we're at right at this moment in time and where we close by the end of today, we could really theoretically drive price action going into next week. That's how important this level is. If you zoom in a little bit and you just realize what we've done all week, just take a look, guys. I mean, this is how important it is. You can see it right here. You can see it right here. And you can see it this morning as those are the highs from today, like right there. So it is extremely important what happens today. And guess what? We have two sets of news that could possibly move the needle today. We have not only do we have the durable goods orders, but we got University of Michigan data as well that could potentially move this market. Now, typically, well, first of all, I think durable goods orders could actually move the needle today. I'm glad that we get to cover that one live. Do I care so much about the University of Michigan consumer sentiment? Not really, but today could be the day where, like let's say, whatever the durable goods data does, it allows for a continued squeeze in the S&P. Well, that squeeze higher. That's what I meant. A move higher in the S&P, then by the end of the day, when the University of Michigan, or not the end of the day, but as people are wrapping up for this long weekend, that University of Michigan consumer sentiment comes out and just confirms that stocks should be squeezing higher again. You're just going to get that as a catalyst that continues to drive price at the end of the week because no one wants to be on the short side. The flip side to that is, the durable goods orders, maybe they come out in a situation where it drives stocks lower and everybody looks around and says, crap, I don't want to be long stocks going into a long weekend. I want to take some more profits off the table. Then the University of Michigan consumer sentiment just continues to drive that price action lower at the end of the week. Remember, we are going into a holiday weekend here in the US. That's a big deal. We've come off a really big week in earnings with NVIDIA. That's another big deal. NVIDIA, by the way, if you guys haven't seen this morning, pre-market, it is trading almost back at those highs from yesterday. Just FYI, you can pull it up here. You can see pre-market, we're trading at 1048. So we are literally, almost at yesterday's highs. You can see we're struggling around this 127% extension. It's creating more of a consolidation point for us. But hey, we haven't seen much of profit taking at all, really, on, in the markets just in general. So going into a long weekend, summer's approaching, people might be in the mood to take some off the table. We'll see. But like I said, and I'm going to reiterate, today is, I don't think I can emphasize how important today's close is going to be in the S&P. It is literally the most key level that we could be trading at right now, that we're rejecting right now. It's huge, so whether we close above or below this, I think is going to set the pace going into next week. All right, now with that being said, I want to bring in Ryan. And good morning, happy Friday, Ryan. How are you? Oh, wait, before I even do
Hello?
that.
Hello?
No,
Hello?
hold your horses. But George, good morning, George. He said to sell in May and go away. You know what? It's an old saying for a reason. It is. Even though it hasn't been too effective in recent years, it still is a saying for a reason. All right, anyway, Ryan, good morning. Hello. Happy
Morning,
Friday.
mate.
Hey.
What's up?
I don't know. What's up with you? Happy
We're all selling in May, are we?
What's
That's
that?
if that's a good thing with FX, okay? Because there's two sides to a currency. Something's always been sold, so that saying can be true even if a currency's going up.
True point. Good point. So what's going on, man? I mean, I know you're wrapping up the week. You're getting ready for a long weekend too. The UK has a holiday. You guys are celebrating um one day in
Being
spring,
alive.
one
We're
day in the
celebrating
summer.
being alive, Blake.
Okay, it's just the day to be alive. Great day to be alive. You're taking the day off. But as you are preparing for a long weekend, what's kind of your thought process going into this week? I mean, how have you read price this week and the moves that we've seen? What's really kind of stood out to you, and what are you thinking?
Yeah, I think there's your example. S&P is valid in a lot of pairs at the moment. You've got cable still knocking around 127. It refuses to go down. We had a little bit of a blip this morning, but it's back at 127, keeps getting up there. So again, this is another where it closes above or below 127 is important. Aussie dollar, it's another one. We were messing around that 66, 40, 50 area, had the break back below. It's now resistance again, and now we're messing around the big figure. That one looks a little bit more shaky, but it's probably following metals at the moment, copper, gold, and all sorts. So yeah, it's really a case of how things are going to finish. Euro sterling, we can't get above my 85, 30, 35 area, which keeps the big figure down at 85 in play. So there's lots of things that if they happen today, they might change the picture. If they don't, it keeps the picture the same, and things sort of sitting on a tightrope.
Yeah, I mean everything is like just flirting, and
Yeah,
I'd like for somebody to just remember the movie 300 where they said this is when he's screamed, Gerard Butler screamed, "This is Spartan," kicked him off the into the well.
yeah.
I need that to happen in the markets. We need that to happen in the markets. We need something to shake this up. So and you're right. I mean, we are just flirting with pretty key levels everywhere. You mentioned metals. Let's talk about them really quick. I'm assuming Stelios is here.
Hello.
Hey, Stel. Hey, good to hear you this morning. You look at silver, and I got wiggled out yesterday. I actually put in a silver long at 30.20, 30, right around here. This is a big area, but the way that the market was acting yesterday, I was like, yeah, I'm going to take that off. I mean, but you can see just huge levels. Silver looks like it's kind of at the make it or break it, right? I mean, we gotta stabilize here or else.
I disagree. Hello.
Intraday. I
Oh,
know you're like
intraday.
you're gonna hold
Yeah.
silver till you turn
Intraday, yes.
362 years old. I get
Hey,
it, but no, for those of us that actually trade over the course of a week or two, I mean, it's really a
okay.
key level, right?
It is actually, yes, you're right. But no, I mean, my view is obviously a lot longer term. People who follow us, who are in the chat room will know I have a position from 23.10 still running that, so that's been going pretty well. But overall, I agree. This is a level that's important. But look at if you go on a daily chart, are you on a daily? You are on a daily chart.
I was on a daily chart.
Yeah,
Here I am.
yeah, yeah. I mean, this is a very impulsive move, and we had a leg up from the 22 level. It did some kind of. You have it there. You have the corrective kind of move lower. It touched the moving average, then it went back above, and now it's coming down again. I mean, it's still a bullish formation any way you look at it. What's going to change this on a more macro level? Well, if the Fed starts hiking again. That could have obviously an effect. But then again, why would they be hiking? Because inflation's high, which means things are getting more expensive, which means silver should be cheaper. It doesn't make any sense. So, it takes you need a lot of patience if you're trading like I do. If you trade it intraday, it's a completely different animal. Um,
Yeah.
One thing I wanted to say, you mentioned Nvidia before. I will summarize what's happening in the markets with one word, and that is actually it's an acronym FOMO. And I still think equities are in FOMO mode, even though we were down yesterday on the S&P and most markets. If you look at Nvidia or the S&P or the Nasdaq, we're still in a bullish trend. It doesn't make a lot of sense, but we still are. So I am not going against this. I wouldn't go against this. And I tell you what, if I was short equities, I'd be really worried still, and I've been saying this for months now, for weeks, because any pullback just gets bought straight back. So I think the path of least resistance is still to the upside in risk, even though it doesn't make a lot of sense. Some valuations are completely ridiculous, but hey, that's FOMO for you. At some point, FOMO ends, probably as we get close to the US elections. But for now, I don't see what's changed.
Yeah, no, I agree with you. The thing, let me do this real quick. I'm gonna delete this really fast. I'm gonna put you on a weekly chart on the S&P.
Ooh, I love weekly charts.
Yeah, here's a weekly chart, and you whether you're looking at the E-minis, you're looking at the S&P. This is a CFD from Oanda. We're getting a potentially a neutral, weekly candle, depending on where we close today. Obviously, is going to have a lot to do with what this candle looks like. We could have actually a gravestone doji, maybe a shooting star. Right now, it looks just like a doji, which is an indecision candle, if you will. But what's most nerve wracking, I guess, with the market, and bulls are probably thinking this too, is the false breakout, the potential of a false breakout. That is the biggest risk that is in the market at the moment. And that's why I think today's close is going to be key. But you're right. I mean, you look at price, dips have been very shallow. I mean, everything's been a garden variety, 6 to 10, or excuse me, 5 to 10% pullback. Even the last pullback we saw from like 2 months ago was what, 7%. So it's been a very, very shallow move. I do want to go real quick. I want to go back to gold, to precious metals. Silver looks like it's holding up very well. Gold, on the other hand, is a bit of a risk right now because we've actually taken out an ascending trend line that I've been, watching this week. We took that out, and now I think, and I know I mentioned this yesterday on our private, ForexAnalytix shows, that this is now going to be at risk of more of a double top. So it, gold, now, a couple things I need to throw out there. Gold reminds me the fever that we have in gold at the moment, which, keep in mind, longer term, this doesn't really matter, but today it does. I think there is a lot of frothiness around gold. It reminds me of that time. Do you remember that Indian? There's a meme of that Indian gentleman that was dressed in all gold and had gold chains around his neck. You remember that one? That was like literally at the top
Yes.
of the gold market, like our previous highs. It was like around, like it was right around this 2020 level. But wasn't it around then, or no, maybe it was around, it was even earlier than that. I forget when it was, but it like marked the top and the move in gold at one point. Um right now there's a lot of frothiness around gold. I even to a point where I've been getting texts over the last month of people that don't actually even trade ever. Don't really even invest in the markets that are into completely different things. One in particular, a gentleman texted me and he said, he was like, oh, I said, what are you doing? He's like, oh, I'm out adulting right now and I'm doing adulting stuff. And he had a picture of like 3 gold bars and a bunch of silver that he was at a gold exchange, here locally. And I'm like, oh God. And this was literally at 24.50 the last time we were up here, just like literally back here, like a week ago or whatever. Or a couple weeks ago, excuse me. And then but here we are, threatening, some, potential move lower. Now I'm not one that's going to be shorting gold. I'm going to use it more as a cue in what I'm doing in the markets, but 2280 is really critical because if we break below that for some reason, this is the downside um target of gold, which would be about 2100, let's say roughly 2100. To me, that would be a great place to be on the long side, to be frank. I mean, that would be like a level that would be good because it would shake out a lot of longs. And that'd be a hell of a reset, having a more than 10% move lower like that would be a great level just to reestablish longs. You can see this is previous breakout points here. And I think we could get in that neighborhood, but there's a lot of work that needs to be done ahead of that. I don't even know. I'm trying to reconcile in my mind how that even happens. Like, what is the driver? And I guess it would be yields, right? Thinking out loud here. What do you think?
To me, I
Oh,
agree.
yeah. Oh,
I
okay.
think I think yields are going to be the driver. They have been the driver for months and months now, and um, it all depends on what let's face it, the Fed is going to do. Yes, the
Yep.
ECB and the Bank of England are important, but the Fed is the driver, and we are currently pricing one cut for this year. What's the risk of that? Going to zero, pricing hikes? I don't think they're going to be hiking, but I think the risk now again skews towards them, towards the market at least, pricing more than one cut.
Yeah,
So
well, I can't imagine. I personally can't imagine them hiking from here.
yeah,
But I think what we are seeing is price pressures remain fairly sticky. However, you have a lot of retailers. Big news this week with McDonald's bringing down their prices. Target's like cutting prices on 1,500 items or 5,000 items. I forget what it is. And you're going to have all these now it's a fight, right? What retailers, not just here in the US but globally, are going to start fighting for business. How are they going to fight for business? They got to cut prices. So I find that an interesting trend that I think is going to play into the markets in the coming months, but we'll see. Who we haven't heard from this morning yet? We haven't heard from Mr. K-Man, uh, yen trader extraordinaire. Hello, K-Man. Happy Friday to you.
and our
What are
favorite
your
Belgian as well,
our favorite Belgian next to some
Hercule
beer?
Poirot.
K-Man, how's it going, buddy?
Yeah, very nice. Very, very well. Thank you. It's Friday. I'm just waiting for the Belgian National Bank business climate numbers, most important data point of the month. And that comes out in 40 minutes. No, I'm joking. That doesn't change anything. So, yeah, you were talking about the yen. It's still the same. Ueda has been very diplomatic so far. We've seen a bit of, I'm not going to say completely failed, but they were trying to buy some bonds, scheduled bonds overnight that the short end too excited about anything. Although the yields in sympathy with with all the rest of the yields are ticking a bit higher, but so far the yen has not yet shown any signs of crawling back anything. Dollar yen very stable. Yen crosses, though, are moving up towards and already for some higher than in the intervention levels.
Yeah, yeah. I mean, look at the euro yen. I mean, it's getting up there. Sterling yen's getting up there. Aussie Kiwi yen, just there's their intervention levels. I mean, crazy, right?
Yeah, and then they're all pushing each other. All those, I mean, there's the Swiss and the yen. I've got the impression they're pushing each other now, and then there's this part of the Chinese yuan as well, which is not strengthening at all either, and that's like a bit of the Asian basket stuff, and yeah, it's still not helping the yen. It's gonna take something serious. Perhaps in June, who knows? Who knows that they may
I,
come up with some surprise hike because of the yen level.
I don't often follow the dollar CNH just because as Americans we're fairly limited in how we can trade it. But that is a Gartley, just FYI. And I know it's a managed market, so I don't like to really do chart patterns on them. But it's worth noting, I guess. Does look very similar to the dollar yen. Hey, I was looking ahead, K-Man, and
Mm.
I want to talk to you. You're the perfect person to talk about this. Next week, or next week, actually Monday morning in Japan, which we're all going to be on. Well, a lot of us will be on holiday. Um, Ueda is speaking, and he's delivering the opening remarks at the Institute for Monetary and Economic Studies in Tokyo. Now, Ueda, who had been very, very critical of the BOJ for many years about keeping rates low for longer, forever. He's going to be talking about monetary and economic studies. I mean, shouldn't he be dragged through the mud a little bit and have to defend himself and in the fact that he has not normalized policy quicker because he was so critical of the BOJ for so many years. I mean, for decades, really. What do you think about that? He is supposed to speak on Monday morning.
Well, I mean, he had all the opportunities to do so yet, but he's not been the big reformer yet. He's just like the smooth operator.
Right.
He's really not reforming the whole thing. Now, people are expecting them perhaps to do perhaps two hikes of 10 BPs each. But if that's going to be the case, because he has a very close cooperation with the government and it doesn't want to put the government finances more in danger than what they are already, I mean, it's not going to help the yen too much. I mean, it's going to take some change of tone, which he, in a way, did on his past couple of interventions, but saying that he's looking at FX. But then he had the chance of saying as much on today's and yesterday's G7 in Italy, and we haven't heard anything of the likes. He's been very diplomatic. So, but a critical of the low interest rates. I don't know if you're talking about the right Ueda there, because he's one of the architects of it.
Oh, I thought he was really, really critical
No,
of
he's
the
actually
BOJ
one of
for
the
so many
architects
years.
of it, even before Abenomics.
Okay. All right. All right.
But
Interesting. I guess the one thing I guess we should probably point out is if you are around the markets and you're focused on the yen, maybe be looking for his what his speech looks like or reading
yeah.
his speech Monday morning in Tokyo. It should be an interesting one. I'm gonna try to remove myself from the weekend just to read that at least for 15 minutes when it comes out Monday morning in Japan. Hey, real quick, guys, we have a few minutes before durable goods orders. I see some comments coming in from Tony regarding gold, and look, I will be the first one to say that yes, one of the big primary drivers of gold has been China and Russia, and so that's why I can't be me physically. I can't actually short gold, but looking for places to be on the long side is just going to be my my mode of operation moving forward. I think, and same with silver is just looking for strategic levels to be on the long side, tactically. But aside from like core physical holdings, I'm talking about being a trader more or less. But I do want to just look ahead into next week. You guys just a couple heads up. So we have on Wednesday morning we have CPI out of Australia. We have CPI out of Germany and some Eurozone CPI data midweek. Swiss GDP. We have U.S. preliminary GDP, which is going to be potentially a market mover, especially when you're talking about stocks when they're at at these levels. At obviously, we're going to see critical levels being broken or supported by the end of this week. We also next week we have US PCE data, which is obviously at the very end of the week, but really what the Fed's focusing on. And we have some China data like PMI data at the end of the week that could move, some of the antipodean markets and maybe even the CNH itself. And by the way, speaking of which, if you guys haven't looked at this, I'm just going to bring it up really quick. The Chinese Hang Seng. Well, it's obviously this is the Hong Kong market. Look at the big rejection of the 618 retracement. That was huge earlier this week, and we've gone like almost straight down since then. So that's been a hell of a correction just from that key fib level. Just worth noting, just something that you should keep your eye on, even though we've got the golden cross, quote unquote, as the 50 has crossed through the 200 DMA. That still is, as soon as we got the golden cross, the market actually went straight down. So food for thought. All right. Now we have, like I said, some data coming out. I'm going to get ready for the data, but Ryan, specifically, what are you looking at currency pair wise? Is there anything that, you're thinking as we go, like, I'm looking to be long, short the dollar, blah, 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 sterling, anything else as we get ready for this data?
Not anything fresh. I'm just in management mode at the moment. I've got some positions on, so I'll be watching those cable longs, euro sterling long, and the other bits and bobs, dollar China short, that sort of thing. So management mode. I don't see anything about fresh that I'll be looking to take at the moment.
Now we do have Canadian retail sales. And just I guess should talk a little bit about the dollar CAD. It actually broke out yesterday. It broke above this. I was playing it up into the channel resistance. I was long down here. I think you were long too, Ryan, if I'm not mistaken. Anyway, I played it on the long side. It's really my money maker this week for me personally. But I got out of it a little early. I didn't think it was going to break out above 137. It did, and we're kind of holding it. We held the 618. What do you think about this Canadian currency? You have any views here?
Yeah, I'm annoyed with it. I got stopped out of my trailer 136.25 2 days ago, yesterday, or overnight yesterday, before it shot up through 137. So I'm gutted.
That's frustrating.
Yeah.
That's frustrating because that 136 level has been so key, for so long, and just being flipping on, both sides of it is, it's a little frustrating. But I guess we're going to see if that Canadian can actually, get some legs, especially if the Canadian retail sales come in a little weak today.
I might look at that up at 138 to go on the other side if we get up to that high 137s, 138, which is a bit of a resistance area.
I'm so bearish the Canadian economy. I have like no desire to do that. I might think it if we got closer to 140, like if we got up here, I might, maybe think, that right now isn't the time that the Canadian's actually going to have a big breakdown. But I think the eventual move in the dollar CAD is to trade back up towards the high 140s, or mid 140s, excuse me. That's what I personally think. But anyway, look, we have just a couple minutes. Stelios, are you looking at anything intraday?
Not really. The only thing that's close to some really interesting support, and Ryan has already talked about this in the chat room, is the euro pound. 85, I think, is a huge, huge level. I know Ryan's leaning into that on the long side, and it makes sense. But if that gets broken, I think it opens up a lot lower levels. So
I joined Ryan this week on that. So
good.
Thanks, Ryan. I'm still I'm gonna thank you while we're positive. How about that?
Can everyone buy it, then we might get a rally, and then we can sell into it.
There we go. Hey, K-Man, what are your thoughts? I know we just have a few seconds till this data comes out.
Dollar CAD. I'm long a bit of dollar CAD. I've also bought an option, but I'm starting to have the impression it's better to be in a euro CAD. All euro pairs are going up. In a bit of a delayed reaction to what we saw yesterday on those wages and those data, it seems that all euro crosses are pulling higher today. So but I'm with you. I think Canadian dollar can go a bit higher. We have data in 5 seconds.
Yes.
Yeah, here we go.
A bit poor on
Wow,
the
look at that.
sales.
Look at that.
Durable's good.
Durable goods
Durables
is
is
good.
strong.
Revision
Yeah.
lower, but yeah.
Wow. So this will give the dollar CAD a nice little boost. And Michael Weissman, he's been listening with us for like the last few months, and I actually done a one-on-one session with him. I know Ryan you did one with him as well. He's long the pound Canadian, doing really well in that. So kudos to you, Michael. So yeah, look at this durable goods orders strong. You know, the instant or the first reaction, the initial reaction was stocks was like a little bit of a dip down, but they're still liking the fact that U.S. data is good. But isn't that going to lead the Fed into the, well, we're going to stay higher for longer camp? I mean, what are your thoughts, Ryan?
Yeah, it's more soft landing data. We seem to have switched around again. You know, some of the data we've been getting, the good PMI yesterday. You know, we're going to probably start pushing Powell and his thoughts on not hiking ever again. You know, that's been the trade that's come in closer to FOMC. So, yeah, let's see. But this is all for us and trading. It's all range data stuff. You know, there's nothing here that should bust us out of a big range.
Yeah, speaking of which, I'll just take it over to the euro really fast because Tony mentioned the euro. I was long. I will actually play this a couple of ways this week. I was short earlier this week. I got long earlier this week around the 108.20, and I sold it I think on Wednesday up here. And I haven't played it because I just think we're bouncing to see these two green lines between 108 and 109. And you look longer term, we're in a big triangle. So it's like we happen to be smack dab in the middle of the apex of this damn thing. So it's like why you have zero edge, where we're at. So, up at 110, it's a short, down at 106.50, it's a long, anywhere in between, you got to take little stabs at it and try to extract a few pips from here to there. And that's when it really, you really have to be more conscious of trade management and risk management when you're dealing with these types of ranges. So, before I let you all go for the end of the week, I'm going to come back to Stelios, Ryan, K-Man. I want you guys to maybe bestow some trading knowledge on how you tackle range trading in this type of environment where we're just not getting super explosive moves. But before I do that, and before I come to each one of you, I just want to mention that over the weekend, we're going to have a special announcement about ForexAnalytix. Again, today and maybe even the next couple of days, before you see the week ahead video on Sunday where I'll discuss this. You take a trial of ForexAnalytix, jump in the chat room, see what it's like to be, inside of our community, talking markets, talking about, all these little sub, threads that we have, conversations about everything that we're seeing. Jump in there, try out ForexAnalytix, download the mobile app, use all the tools that we have here, because like I said, we're going to have something special for you. And remember, the market's probably going to have something special for us this week, whether we close in breakout territory or we see some profit taking into a long weekend is to be seen. But 52.85 is obviously very critical, as we've been mentioning this entire show. So, Ryan, what's the best way to tackle range trading environment that you're in? What kind of trading wisdom do you want to bestow on our listeners here at F.A.C.E?
The easiest way to look at it is you have to go on higher time frames. You have to go on 4 hours, dailies, weeklies, okay? And you just look for, the clear areas where, the range is showing up. Do you want me to grab the screen just quickly and I can show you one?
Sure, absolutely. Go ahead.
Let me, hang on, because I'm all over the place. Let me grab it. So you can see that one all right, cable?
Yep, absolutely.
Yeah. So here's a simple range play. Okay. So we've got a wide 120, 130. Okay, big wide range. But inside that we've got this 127, 123, and that's purely defined if you look back. How many times we've stuck in this range. And it goes back. years and years, and you can see the times, and you get big moves off of these ranges. Sometimes it's on the outside, sometimes on the inside, and we've also got in the middle-ish, this 124.50, which acts as a bit of a pivot. So define your charts. Look at take a clean chart, a very clean chart. You don't need 100 million indicators on it. Take a clean chart. Just look at simple highs and lows and just plot those on your chart. Then that gives you hopefully a range. Now the other thing is you've got to have patience when trading a range. It's no good messing around in here thinking it's a range. It's not. So you have to wait for the top. Sometimes you get a move to the top, and if you went short on a first test at 126 right in there, you could have got 40-50 pips out of it, and a couple of times you could have got 40-50 pips out of it. Then all of a sudden it gets a bit messy, gets a bit loose, so maybe you leave it alone, and then you use it as a pivot point. So now you can come down to a shorter time frame, watching the same level and watching what it does. We're holding above, holding above, holding above. Now we're holding below. Now we're back above. So now we're undecided what to do here. So if you want to trade this at 127, you want to trade it, predominantly on the long side. If it's holding above, it gives you a bit of confidence. But if it's holding below, then you can trade it on the short side. So you also don't need a bias. So you can trade these levels short term, but also you can trade them long term. If you traded off the 123, look at what it got you. It got you all the way to 127. So that's the way I set up for range trading. Look at the higher time frames. Give yourself a nice clean chart. Keep your text simple. You don't want to overcomplicate things. And then you have patience and you trust your levels. They don't mean they're always going to work, but sometimes they do. Sometimes they don't. Euro sterling. Let's again put it on a nice clean one. There's your range. At the moment, we've got 85s, 87s. All you have to do is wait for the edges.
Yeah, and you just wait for those edges and play the edges because you can
Give
manage your risk from there, right?
Yeah, exactly. You don't need a lot of risk. You might wait 6 months for this to come down here, but you only need to give it, 20, 30 pips on a stop, because if it breaks, it's likely it's going to go. So you don't have to risk a lot to know you're wrong. But if it does work, look at what it can get you. 86s, 87s. All right, it's 200 pips in euro sterling, but I'll take it for 20 pips at the moment. Profit's profit.
Right. Just harvesting those pips, man. Harvesting those pips. I love it. And Ryan, I appreciate you giving us some insights on how you're trading this range or how you're trading the ranges. Just remember, guys, you have the ability. And Ryan, can I take this back over? Oh, yeah.
Yeah,
okay.
Go ahead, mate.
Remember, guys, if you have the ability of working with Ryan one-on-one, or K-Man as well, and a lot of our mentors, just go to ForexAnalytix.com and you can see all of the different coaches, and you can actually run through each individual one and actually watch their individual videos and see if one's right for you. Matter of fact, K-Man, what are you thinking, and how are you trading these range environments?
Well, basically, that's Ryan explained very well how to trade ranges. I'm keeping an extra eye out all the time, excuse me, on interest rate differentials, option volatilities. Those are like little additional help to know whether the ranges are still valid in time, because if you see the option market like they are now, they are telling us exactly that ranges are the thing to play right now, because all the option you just click on the left hand side vols, that button vols on the left hand side a little lower, then you see the overall vols. They are on the low side, euro dollar threatening in the 1 month to go below 5. Even the cable at 5.5 is cheap. Dollar CAD still under 5 is still cheap. Those are little helps, helping things to watch. The interest rate differentials as well, they are relatively stable. As I've already been saying, like the whole bond market is one big pot of nut right now. So that keeps all the currencies in ranges, because those people trading those options, they are going to sit on each side of the range as well, whether it be intraday or the bigger ones. So I
know what level I look for in euro US dollar 1 month vol, but what triggers a response from you?
Well, if it's to continue to range trade, that is those vols remaining suppressed. Look at the short end. It's really low, right? So
Yeah.
that means that your 108, 109 is probably going to be a brick wall on either side. Although the euros looks a bit strong right now, but we're still only mid-range, right? So
Yeah.
that I look at, and what triggers my attention is that if, for instance, we are seeing 2-3 days of all of a sudden the vol starting to increase, then that increases also the risk of a break of a break of the ranges, you know.
Yeah, yeah. All right. Well, I think that's a great piece of advice for people that don't know how to follow option volatility. And again, K-Man is one of those traders that and coaches you can actually work with one-on-one. Really appreciate your insights there. And Stelios, and I know you're not much of an intraday trader. You like to, stake your claim on something a little bit longer term. But any last minute comments before we wrap things up for the week? And I just need to say it's nice to have you here this week. We miss having you here on a daily basis, so it's nice when you can come in. So any thoughts here?
It's good to be here. So regarding trading ranges, I obviously look at higher time frames than most of you guys. I mean, Ryan said, let's go to a higher time frame, and he said 4 hour. And the lowest I look at is 1 day, is daily. But anyway, what I usually do is I have my conviction on a certain instrument. So like a long-term conviction. And when it's range trading, clearly range trading, just like Ryan showed the 85s to 87s in Euro pound, I'll wait for it to get to the level where I like being long, whether it's if I'm bullish Euro pound and it gets to the lower end of this range, I will buy it, or if it breaks out to the upside again, I will buy it. So I wait when we're range trading, I wait for a trigger. The problem is that the way I trade, I wait a lot. So if you're a day trader, you're gonna be trading 100 times more than I do. But hey, that's the way I do it. So
Well, I mean, that's what you do when you're on a yacht. I mean, when you're on a yacht, you're not scalping. You're
it's a
just kind
dirty
of,
job, but somebody's got to do it, man.
yeah, no, you gotta, lay out in the sun, drink some wine, trade
We
once
need
a
to
week.
switch jobs. We need to switch
Yeah.
jobs.
Hey, I want to say it's been great having you guys here this week. Thank you so much. I know Dale's been out all week speaking of enjoying some sun. He's been in Southern California enjoying himself, hopefully having a great time and ejecting himself away from the markets. So we will look to have him back on Monday. And I want to thank you all for listening in and really, keeping us company and being with us, trading around these markets with us all week long. You all have been wonderful, and appreciate you all listening in each and every day with us. And with that being said, I want to say have a great long weekend. Remember, we will not be broadcasting on Monday. We will not have the Flow Show or the Face Show. And for those of you that are ForexAnalytix subscribers, we will not even have we'll not have the daily roundup or the morning edge as we normally do. The private shows, we were just going to be enjoying a long weekend. So we'll see you back here on Tuesday. That would be Tuesday, May the 28th. So we'll see you here bright and early, really early in Europe, Monday or Tuesday morning. But Ryan, K-Man, Stelios, thank you all for being here, and have a great, wonderful, long weekend.
Have a
Thanks,
good
mate.
weekend, everybody.
Well done.
Cheers, bye-bye.
All right. Well, thanks, guys and gals. You guys all have a great one. Be safe. Hug your family. And I said this on Twitter yesterday. I truly mean it. Days are long, but man, years, they go by really freaking fast. Can't believe I have a kid that's almost graduating, my youngest almost graduating high school. It's crazy. Anyway, you guys all have a great one. Love your family, love your friends, and enjoy life. We'll see you on Tuesday.